Welcome back to the channel. I am Algobot, and in this session we are going to study an expert advisor for MetaTrader 5 called the Schaff Trend Cycle Momentum Breakout. This is an educational walkthrough, so we will unpack exactly how the strategy thinks, step by step. The engine behind it is the Schaff Trend Cycle, an oscillator that blends the momentum of a MACD line with a double stochastic smoothing to produce a fast, responsive reading of the market. By the end, you will understand how it defines a momentum breakout, how it places its stop and target, and how the actual code reflects that logic. Let us dive in. Let us start with the big picture. The Schaff Trend Cycle Momentum Breakout is a momentum-based strategy that watches a single, carefully constructed oscillator to decide when a market may be shifting direction. That oscillator is the Schaff Trend Cycle, often shortened to STC. What makes the STC interesting is how it is built. It begins with a MACD line, which is simply the difference between a fast exponential moving average and a slow one. That MACD line captures raw momentum. The STC then runs that momentum through a double stochastic normalization, compressing it into a clean range between 0 and 100, with each pass smoothed by a short exponential moving average. The result is an oscillator that tends to cycle faster than raw MACD and can highlight shifts in momentum a little earlier. Because the reading is bounded between 0 and 100, the strategy can define two meaningful zones. A low reading, beneath the oversold level, suggests momentum has been pressed down and may be ready to expand upward. A high reading, above the overbought level, suggests momentum has stretched high and may be ready to roll over. The strategy does not act on the zone alone. It waits for the oscillator to actually turn back, confirming that the momentum picture is changing before committing. This approach can be applied to any symbol and time frame that MetaTrader 5 supports, from foreign exchange pairs to indices and metals, though as always the character of each market differs. It is generally suited to traders who are curious about momentum and oscillator-based systems and who prefer a rules-based, mechanical framework rather than discretionary decisions. Every position is protected by a stop-loss sized from market volatility, and every target is set as a fixed multiple of that risk. Remember, this is educational information only. Trading carries real risk, losses do occur, and nothing here is a recommendation to buy or sell. Now let us walk through the mechanics in plain English. The strategy works on closed bars, so it only evaluates once a bar has finished forming. On each new bar, it takes the closing price and updates two exponential moving averages, a fast one and a slow one. Subtracting the slow average from the fast average gives the MACD line, which represents momentum. That MACD value is stored in a rolling history. Next comes the double stochastic. The strategy looks back over the cycle length window and asks where the current MACD sits between its recent lowest and highest values, producing a first percentage reading. That reading is smoothed with a short exponential moving average. Then the whole process repeats on the smooth series, producing a second reading, which is smoothed once more. This final, twice normalized, twice smooth value is the Schaff Trend Cycle, sitting somewhere between 0 and 100. With the STC in hand, the strategy compares the current value to the previous value to detect a turn. For a long setup, two things must line up. First, the previous STC must have been below the oversold level, which defaults to 25, meaning momentum had been pressed down. Second, the current STC must now be higher than the previous STC, meaning the oscillator has turned up. When both are true, the strategy signals a long and buys at the current ask price. For a short setup, the mirror image applies. The previous STC must have been above the overbought level, defaulting to 75, and the current STC must now be lower than the previous one, showing the oscillator has turned down. When both hold, the strategy signals a short and sells at the current bid price. Risk control is consistent on both sides. The strategy measures the average true range over its look-back period and multiplies it by the stop multiple to set the stop distance. The stop loss sits that distance away from entry, below for a long and above for a short. The take profit is then placed at the reward to risk multiple of that stop distance. So with a stop multiple and a reward multiple of 2, the target sits twice as far as the stop. Only one position is held at a time. While a trade is open, the oscillator keeps updating, but no new orders are placed. Here is the heart of the strategy, as it appears in MetaTrader. At the top are the input parameters you can adjust. EmaFast and EMASlow at 23 and 50 define the MACD line. Cycle length of 10 is the stochastic lookback, and smooth period of 3 smooths each pass. OversoldLevel and OverboughtLevel at 25 and 75 mark the two zones. ATR period of 14 sizes the stop, AtrStopMultiple of 1.5 sets how far, and RRMultiple of 2 sets the target relative to that stop. Look at the long block. It checks two booleans. The first, STC is oversold, is true when the previous STC was below the oversold level. The second, STC turning up, is true when the current STC is greater than the previous STC. When both are true, the code reads the ask price as the entry, places the stop loss 1 stop distance below, and the take profit 1 target distance above, then calls trade.buy with those levels. The short block is the mirror. STC is overbought is true when the previous STC was above the overbought level, and STC turning down is true when the current STC is below the previous one. When both hold, the code reads the bid price, sets the stop loss above and the take profit below, and calls trade.sell. Notice both sides normalize the prices to the symbol's digits and share the same volatility-based stop and reward-to-risk target. Clean, symmetrical, and mechanical. Let us bring the logic to life on this illustrative chart. Along the bottom, you can see the Schaff Trend Cycle oscillator, our momentum engine, moving between 0 and 100. The green dashed line marks the oversold level at 25, and the red dashed line marks the overbought level at 75. Watch how the oscillator and the price move together as the story unfolds. On the opening candles, price is drifting lower. The first candle closes down, then the second pushes further down, and by the third candle price has carved out a fresh low. Look at the oscillator underneath. As price sinks, the STC plunges deep into the oversold zone, dropping to around 10, well beneath the 25 level. That tells us downward momentum had been pressed down hard. But a low reading alone is not enough for this strategy. It needs the oscillator to actually turn back up. Now watch the fourth candle in the sequence. Price stops falling and prints a higher close, and the STC ticks up from its low. The previous reading was below oversold, and the current reading is now higher than the previous one. Both conditions line up, and the strategy signals along. The buy entry marker appears right here, with the entry taken at the ask price. The stop loss is placed 1 average true range multiple below, sitting under that fresh low, and the take profit is set at twice that distance, using the reward-to-risk multiple of 2. From there, momentum expands upward. Candle 5 closes higher, candle 6 adds to the move, and the oscillator climbs steadily out of oversold, through the midline, and toward the overbought zone. By the 7th candle, price reaches the take profit target, and the long trade is complete. Notice how the entry made sense structurally, coming right as downward pressure faded and buyers stepped in, and how the target sat a measured distance above. Now the market keeps pushing. On the 8th candle, price makes its high, and the STC surges above 75 into the overbought zone, reaching around 90. Momentum has stretched high. Again, the strategy waits for confirmation rather than acting on the zone alone. On the 9th candle, price prints a lower close and the oscillator rolls over, falling from 90 back toward 82. The previous reading was above overbought, and the current reading is now lower than the previous one. Both short conditions are satisfied, and the strategy signals a short. The sell entry marker appears here, taken at the bid price, with the stop loss placed 1 volatility multiple above the recent high and the take profit set at twice that distance below. Then momentum expands to the downside. Candle 10 closes lower, candle 11 continues, and the oscillator slides back down through the midline, unwinding all the way toward oversold. By the final candle in our sequence, price reaches the take profit target below, and the short trade is complete. Across both trades, you can see the same disciplined rhythm. The strategy waits for the oscillator to leave an extreme, waits for it to turn, then commits, always with a volatility-based stop and a fixed reward-to-risk target. This is a simplified illustration to show the mechanics, and real markets rarely move this cleanly, but it captures the core idea. That brings us to the end of our study of the Schaff Trend Cycle Momentum Breakout. We covered how the strategy builds a MACD line and folds it through a double stochastic to form the STC oscillator, how it signals a long when the oscillator leaves the oversold zone and turns up, and a short when it leaves the overbought zone and turns down. We also saw how the stop loss is sized from the average true range and how the take profit follows a fixed reward-to-risk multiple. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you would like us to explore next. You can learn more at www.overboughtlevel. Past performance does not guarantee future results. Trade responsibly.